Welcome back to Old Guy REI. Here we are again. Mikey's back with me to talk about all the highlights from our last Wednesday Zoom accountability Zoom call. And there were quite a few topics discussed this time. The meeting went on for quite a while, right, Mikey?
Yeah, over 3 hours. I clocked it at.
Yeah, that's great. I think a lot of people are finding value, which is our main goal, to be able to help people with a lot of different topics. I know maybe I'll start at the end, but there was a lot of discussion regarding commercial financing and things like that. And thankfully, a couple of the people in the group are familiar with that. I know I'm not too familiar with it. And you and I have talked in the past, is commercial financing something that you would be comfortable doing?
That is feels so far away for me, but it is something good to know about in the future, and it's always good to have options.
Yeah. And there is even talk about fixed 30-year commercial debt on, I think it's 5 to 8 or 5 to 9 units through Convoy, different places like that. I think Zuber has mentioned some DSCR loans that are fixed, 30-year fixed as well. But anyway, I just mentioned that because we've talked too before about us being newer investors and not having a ton of experience. But when people join the group, everybody varies so much and their experience levels are so different that there's usually help for people who have questions, no matter what the topic is.
And I'm grateful because I always learn from everyone. There's always something, a little nugget that I can take away and I can just have for future reference.
Yeah, and like you said, I mean, if we're not ready for something right now, it's still good to learn about these different options because they will help us in the future. There was talk about someone in the group had just closed on a DSCR loan, so they were able to explain the terms that they got on that loan. They actually shared the institutions that they were reaching out to for help. I think DSCR could be something because, like right now, they're talking about DSCR rates being as low as conventional, if not a little bit lower.
Mhm. This was a couple months ago, and I had worked with your lender, Brian Bilstein of Neighborhood Loans, and I think at that time, a couple months ago, he was quoting me 7.625 for a DSCR.
Yeah, and I think the person that was talking about it this week, I want to say she got under 6.
Wow.
Yeah, so and like we've said, I mean, lending changes week to week, so you got to keep checking in and see how things are changing for you too in your situation.
And I know she had mentioned the minimum loan was 50,000 and property value of 75,000 for that DSCR lender.
Yeah, I was glad to hear about that because that's why we connected with Brian in the first place because they're at Neighborhood Loans. They do go down to a 50K minimum loan. And with the stuff we're buying in St. Louis, um, being between 75 and 100,000, a lot of times we are pretty low on the loan amount. So that's helpful. The person that she went with, though, they had a 75K minimum loan amount and that worked for her because the property was 100,000, I think. So,
Okay.
yeah. Um, and on the same lines, we've been talking about mortgage recasting and things like that, and how that could help you later on in your portfolio. If you have a property that you've been paying on for, 7, 10, 12 years, and the principal balance is down quite a bit, you might be able to recast the loan and lower your payments and create greater cash flow for yourself. So that's something that we're looking into right now, and I'll try to keep everybody posted on what we find out.
Yeah, and even you ran that scenario through with me on one of the properties, and I'm not the best at math, but usually for a newer property that you got a loan on, it's not worth it. It's better, just to give it time, then revisit it. But I reached out to the loan company and they said it would be 10% of the loan with a $250 fee. to recast.
Okay, so you have to put a 10% lump sum, and how much was the fee?
$250.
Okay, that's
Yeah.
not bad.
Yeah. That was with Freedom Mortgage.
Okay, we're with Mr. Cooper on our primary. That's the one we're looking to redo because we only have 10 years left. But if we can keep our mortgage rate because it's 2%, and when I ran the numbers, hopefully they're close to what it would really be. It could save us quite a bit. Like I think it was like $1,300 or $1,700 difference from the monthly payment that we have now.
Yeah, that was a really interesting conversation in school where you had posed that question and the three amigos were kind of giving their takes on it. I love that.
Yeah, they're always so helpful. And too, like Matt was saying, he's doing 9 of them right now, so he's got some experience. But they did. I mean, Dion had a totally different take and experience with his bank. So um, Matt and Zuber were saying that when you do a recast, they can change your interest rate. So be watch out for that because the whole point of it for me is that we keep that 2%. But if we're gonna have to change it, it might not make sense to do it.
And a big takeaway was how the banks look at your debt, where they just see it on their books at 2.75. They're like, this is doing nothing for us. So there's a reason behind their thinking that didn't even cross my mind.
Yeah, I know they want to get rid of that because they're losing money on our loan. There was a lot of talking about mortgages and stuff, and one of the other people on the call had asked when is a good time to refinance. For example, I think he has a current loan at 775, and a couple of the guys in the group talk about that they would consider refinancing if rates dropped by 1%, maybe 1.5% would be optimal. And that way you create more cash flow just doing a rate and term refinance without pulling any cash out. There are some fees involved, right, with that, but you, you have to analyze your deal that way with what you're going to pay to get it done and how long it will take to get that repaid back and things like that. And that's what we're looking at too. And I think you mentioned you have loans like we do, someplace around 6.6 to 7.1 is the range on 3 of our properties. What are yours like?
Yeah, I have a 6.875 or 5.995. And then if this one closes, it'll be 6.5. So I set rate alerts with Brian and we're gonna kind of wait and see.
Yeah. And like we were talking earlier about the fact that just because the Fed cut rates doesn't mean the mortgage rates are going to drop. So we have to be careful and watch that too.
And I
They don't.
thought, oh, I'm sorry. I thought that was interesting how it was that Wednesday accountability meeting. The news broke a couple hours before that, but throughout the whole meeting, it wasn't even mentioned because I think we all watched Zuber's daily financial news and we kind of knew that the market already baked in those cuts. So it was kind of interesting to see.
Yeah, I know he was talking with Matt, the mortgage guy, and they were talking about all the calls, the rush of calls that Matt got because people were thinking the rate dropped by, you know, zero point 0.5, I guess it would be on the mortgage. And that's not the case because, like you said, they already had adjusted everything anticipating a rate cut. So that didn't mean that the mortgage rates dropped by that much. And I think nobody on the call mentioned it because, like you said, we all know enough now not to panic and get excited. You got to wait and see how everything shakes out over the next few weeks.
Yeah.
Sean had brought up a good point about title theft and that's a trend going on now where people will create like a false title and go get it recorded. And once they get it recorded, they can go take a loan out on that. And then the property owner doesn't know until it's too late and the mortgage company starts coming after them for the payments of the money that the bad guys took out. So he he said, and he's in Atlanta. He was saying there's a site called the County Clerks Consortium, where you can go in and safeguard your properties there. But we were wondering too if places like LifeLock might protect you against that kind of thing as well. So that's something we have to check into because Cynthia does have us enrolled with LifeLock.
Oh, okay.
We also talked about the progression of an investor and, kind of like the natural steps we take. And because Basilio brought up the fact that he's looking a little bit more into seller financing and maybe a sub two deal. And we just talked about that because I guess the natural progression, at least for me, is, to buy something that's pretty turnkey, go with that. And then as your experience grows, maybe you buy another one that needs a little bit of work and it gets like the projects get bigger and bigger as you go. And Matt kind of reiterated that with his KISS comment, about keeping it simple. And it's taken me a little bit to understand what they meant. But now that we're going through some issues like we've shared in our videos and stuff, that if you try to grow too fast and things happen, it's harder to manage all of it at once, but if you just have a property or two, get them stabilized, and then you don't have to worry about those, then things come up. It's a little easier to keep going forward. You're going through a tenant turnover right now, right?
Mm-hmm. So we've got it vacant and now just waiting for an estimate to turn it over and then we're gonna put it back on market.
Okay, good. And last week we talked about the photos that you got. There were a couple things that were larger ticket items like the stove that was broken and things like that, but it didn't look like anything major. Hopefully the estimate will come back at a decent price.
Yeah, me too.
There were some people talking about the natural progression of an investor. They were talking about instead of us diving into sending out mailers or um, driving for dollars and things like that, that you find wholesalers because the wholesalers are already doing that stuff and they're doing all the hard work and just bringing deals to investors. So I thought that was a good tip. Some of them mentioned that a lot of people now are using VAs because it's pretty inexpensive. You pay, I think some of them mentioned they were paying $5 to $7 an hour for a virtual assistant to do some of that legwork. Have you worked with any wholesalers yourself?
I have not, but would you ever consider a virtual assistant later down the road?
I don't think so. The only experience I have with a virtual assistant that I know of is our property manager in St. Louis started using them for his business. And for me, it was a little bit shaky because it seemed like they didn't know all of the aspects of his business yet. They were still learning it. So I was having to send in duplicate information like um, deeds, warranty deeds for properties that we purchased. And that was during the onboarding process. But a couple of times I had to resend it because there were two virtual assistants working on the same property. And I think it's a little different with the wholesalers, but like I said, that's the only experience I have with VAs so far.
Yeah, there was that interview with Aaron Amin, and he had interviewed someone who had found a virtual assistant who front to back kind of finds the deals and gets it to closing to the person he was interviewing. And oh, if you can get a virtual assistant like that, that's next level.
Yeah, that seemed like a big advantage. With that, too, talking about different ways to find deals through wholesalers and things like that. But Sean had mentioned that he actually got a deal brought to him while he was showing one of his vacant units to a potential tenant. And so that just goes back to, the guys always tell everybody what you're doing, right? And that was a great example of it. a couple of people. One of the other St. Louis investors that we talked to had just purchased and closed on a duplex, and I think he had inherited one Section 8 tenant, and he wasn't really seeking Section 8 tenants, but he thought since he had one, he would call the housing authority and see about filling his other unit with a Section 8 tenant. And he was able to do that and got really good rents because of it. I think higher than a regular tenant, in fact.
There was
Yeah,
there was one investor talking about a good problem of having too much money and just waiting, just having all that dry powder, waiting to deploy capital, and everyone got a good laugh on that. And sometimes the meetings, we joke and stuff, so it's kind of good to have a little fun, laugh here and there.
yeah, I think that's really important too. And hopefully people, maybe if they're new joining a meeting or something, hopefully they don't leave because I don't know that like it's too friendly, but we've mentioned before, sometimes we talk about crazy stuff, and sometimes in the past, the meetings haven't really been about real estate. We've talked about traveling in RVs, we've talked about spam recipes, we've talked about all kinds of different things, our favorite beverages, music that we love to listen to. So I think that's pretty cool that people come back week by week in and week out, even though the discussions are not hardcore real estate. I think that you have to have a little fun too.
You know.
And I think you mentioned it earlier, and I thought that was a great point with joking around and stuff. I think since we've been meeting so long with all these people, and you guys are all really friends to me, that we can kid around like that, and nobody gets offended, and especially when that financial firefighter joins us.
Yeah, and even you're joking with Basilio, that was really funny too. So I got a good laugh out of that while I was driving for work.
Yeah, because he thought I was serious at first. He was ready to give up that address. Um, Michael had brought up a question about uh, leasing agents, and he was asking if anybody in the group used a leasing agent. And some of the replies that he got on that question were, um, I think Basilio actually used a leasing agent, and Basilio said that he checked around at a couple of real estate companies. He researched their reviews online because they did offer leasing services, and the rates could vary. So you got to check that. But he said he just found one with a great review and tried them and has had good luck with them so far. One of the other things that came up was renter's insurance, and somebody asked the group if who did require renter's insurance. And I think most of the group does require it, and it's stated in their leases. And I think half of the half of the people in the group were satisfied just requiring it, because whether the tenant got renter's insurance or not, since it was stated in the lease and they signed it, then any damages were their responsibility and the landlord should be held responsible. The other half, or some of the other half, mentioned that they get added to the renter's policy as well as an added insured, and they also require proof every year when they renew the renter's policy that the landlord gets a copy to prove that they paid for the renter's insurance for another year. Have you had that question come up with your properties? Do you know if
Yeah,
you,
we for my PM, they do require it.
okay.
And that was interesting hearing that story about the one tenant attempting suicide and how the renter's insurance got kind of that story behind that.
Yeah, yeah, that was a crazy story. One of the people in the group had a tenant that attempted suicide, but they didn't they weren't successful. And he even mentioned that the tenant is still one of his tenants. So that was really crazy. But the insurance was going to be used to clean up that mess. But it turned out that I guess the tenant found a different way to get that covered. And so they didn't have to use the insurance to do it. But yeah, that was crazy. I mean, somebody else on one of the past meetings was talking about, we should have a video or meeting with landlords telling their horror stories, because you never know. We always think we're going through the worst, right? And nobody's ever gone through a harder time, but there are a lot of really bad stories out there. So I'm in a kind of a crazy way, it could help someone to understand that things could always be worse, right? You could always be going through something harder, and it might make you feel better. I thought it was kind of a weird way to feel better, but you know, to hear that somebody had gone through something worse. But I think the positive note to that is you hear somebody going that has gone through something worse and they made it and they're still a landlord, that you can make it too. So I think that's the message I took away from that.
And I'm glad the tenant's okay and still renting,
Oh
so
yeah,
that's
for
good.
sure.
Yeah, yeah.
For sure. There was one question that I have to do a little bit more research with, but somebody had asked about doing a wrap, and I wasn't quite sure what it was. It has to do with um, more like a seller financing or a creative financing method. So we're looking into that and see if we can get some answers for them.
And it's funny because towards the end of the call, we are talking about velocity banking and especially that one channel, Fantastic, where I tried to listen to some of the videos. It just flew right over my head. I know Jared is deep into that, but it's something, you think about shiny object syndrome, but you also think about trying to learn more. And, there's a time and place, but that's something I just can't understand right now.
Yeah, I think, you know, later on, once things are all stabilized and running really smoothly, you'll have time to dive into some other topics that are interesting to you. We talked about that. Cynthia and I talked about it earlier too, that um, we need to stay focused on getting stabilized, right? With all the stuff that we're going through, and then once all of that is running smoothly, we'll have more time to, I think, dive into other topics that will help us optimize. Like Matt always says, first we got to stabilize and then you can concentrate on optimizing. And a couple of optimization topics that I always think about are like insurance, for example, going through your policies and making sure that, maybe you can up your deductible, that will lower your rate a little bit, or we do cash value policies, and that's been a topic in recent weeks to save money on the policy, because I think the majority of us don't plan on ever using our insurance because it'll go up across the board if we do. Unless it's a catastrophe, then you might have to, but that's the only reason I think we would ever use insurance. Um, so there's insurance, and then the mortgage recasting, that later on in the later years, you can use that to create more cash flow, even selling a couple properties and paying off a couple so that you create really good cash flow then. Like I mentioned earlier, some of the guys were getting really deep into commercial lending, but one of the things I thought was interesting was that it seems like in the commercial space, your relationship with your bank is critical, and it could help you get better rates. Uh, and better rates might mean if you make a deposit into that bank and keep money in there, talk to them about the rents that you're going to have coming in and what you'll be depositing each month with them. And I think that would give you more favorable terms. At least that's what they made it sound like. And then um, someone had mentioned too about getting a better rate. They got a better rate on their primary because they did it during some kind of a promotion that the bank was running. So to keep your eyes out for that kind of thing too. But yeah, there was a lot of good topics that night.
Yeah. And I also like the one investor talking about the TSP to self-directed IRA. That was interesting. I haven't heard anyone talk about that before. So that was good. Good info too.
Yeah, I think that there can be some good things. I don't know that much about it, but what I do know is that you're pretty limited if you do buy a property inside it like a self-directed IRA. You know, I think Michelle mentioned like you can't live in it, you can't actually work on it. And they take away some of the benefits too. Like I think depreciation is not really an option, uh, and different things like that. So that's another thing that we'll probably need to learn a bit more about as we go down the line.
Yeah, and I didn't even realize you could kind of pivot and go into private money lending through self-directed IRAs. So just another unlock for me when I heard that.
Yeah, a lot of people talk about that. April Crossley's really big on that.
Mm.
And we watched her in the beginning of our journey quite a bit. She's very knowledgeable. And I've heard other people talk about, you know, if some people have a huge amount of money sitting in their retirement accounts, they might as well make, you know, a good return on it while it's available. And they really don't have too much risk involved, right there. If it's tied to the property, I mean, a lot of them don't really care about taking over a property if the borrower defaults and things like that. But that's in the worst case. I think the majority of the deals do work out pretty well.
Mhm.
So I think that wraps it up for that meeting. Of course, we'll be back again next week to talk about the one coming up in a few days. And again, I appreciate you joining me to do these.
Yeah, thank you. Thanks for having me. And hopefully one day and when I reach time freedom, I can actually be more active in the calls.
Yeah, no, we appreciate you. I know there's a time difference for you being in Hawaii, and it's a little bit early when the Wednesday call happens, but you've been great about being able to participate. So thanks again.
Yeah, thank you.
Okay, we'll see you soon.
All right.